we are continuing our focus on property this morning. Interest rates, they're at an all-time low, but many homeowners are not taking advantage of the chance to get a better deal and save themselves thousands of dollars every year. We're joined now by Mark Bouris, the Executive Chairman of Yellow Brick Road. Good morning to you, Mark.
Thank you, mate.
And congratulations, mate. I'm dipping my lid to you. On the footy show this week, Mark, on the rowing machine, it's a competition they hold every week. They get a guest star to come in and have a crack. Mate, you beat Anthony Menicello, who's one of the fittest guys in the country. Recently retired.
I don't know, something must happen. I can't believe I beat Minnie.
Yeah,
but I did.
Have you spoken to him?
No, I'm going to text him. I was going to text him, but I thought he was a bit rude, you know. Like
I bet he's lying low, mate. That is a great achievement. You keep yourself in good nick, financially as well, of course, and it just seems strange to me that, that with the opportunity to change interest rates right now, people are not doing it. Why not?
It's crazy, Cam. Like, we did a survey. 83% of the people we surveyed have not changed their finance lender or gone to sort for a cheaper interest rate. 83% have not done that in the last 2 years. Yet we're at 50-year lows in interest rates, but those low interest rates have only actually come in over the last 2 years. So these people are losing about, or paying about 1% more than they should be. I can't believe it. And the reasons are, most of them think it's going to be too hard.
Yep.
Two, they don't realise what the savings can be. And finally, most people say that the fees and charges, all the costs associated with doing that changeover is too great, which is just BS. There's no way in the world that's the case.
Well, I recently changed banks, got myself a better deal, and I have to say the fees are not the problem. It's not quite as easy as the banks pretend, oh, we'll do it all for you. There is a bit of paperwork and there's a bit of, you know, mucking around involved. But if someone had the suitcase full of cash that you're going to save right there, you'd work all weekend, all day, all night to make the change.
Well, because you can save like 150, 200 grand over a life of a loan. Someone said, look, here's 150 grand, work for the next week just to change your home loan over. You'd do it.
Yeah.
You'd do it in a heartbeat.
Yes.
And I just don't understand why people don't do it. And there's a mindset. And I also don't think people understand the difference between the interest rate they're currently paying, because once people get their mortgage like 3 or 4 years ago, they get themselves set. They never again look at their interest rate. How does it compare to what's going on in the marketplace today? If you're paying more than 4.7% interest on a variable rate today, you're paying too much.
Yeah.
Yet lots of people are.
A lot of the people are.
Most of the market.
Yep. So, look, it's that inertia that prevents them from getting a better deal for themselves. But as we see these tips here, you know, shop around, do some research and ensure you have a flexible loan. Do you see interest staying low for a while, do you?
Yeah, well, if you listen to what the Reserve Bank Governor said the other day, which was like earlier this week, he said we're going for a long period of low interest rates. So now is the time to get set. Now, you might even want to start thinking about fixing your interest rate now, too, because there's unbelievable fixed rates around.
All right. Look, there's lots of smart people telling us we're in a bubble and lots of smart people saying we're not. But it is hard to sort it out. Do you think there's still opportunities for first home buyers, first of all, in Sydney and beyond for the rest of the country?
There's definitely opportunities around. Look, let me just say this to you. I heard your previous guest. Markets are perfect. So there's no point saying, oh, you know, property price has gone up by 40%, that's too fast, or property prices haven't gone up by this rate. It's not a matter of the record. Markets are perfect. So what you've got to look at is what is creating that perfect market. So in terms of pricing, what's creating that in Sydney is this is where all the jobs are, this is where the population growth is, and the rate of supply relative to the demand. So the demand to live in Sydney is based on where the jobs are.
Yep.
So whilst ever that phenomenon exists, house prices will continue to go up. So what could change? Could be more supply come on the marketplace. What would cause supply? That's what you've got to analyse. Where, in which district, in which suburb of Sydney, which region of Sydney will that happen? Where are the jobs? Which part of Sydney are the jobs concentrated in? And you'll find that's where all the prices are growing at the fastest rate. If I was a young person today, wish it was, looking to get my first home...
Well, you still row like a young person.
Thanks, mate. Looking to get my first home, the thing I would be considering is rent where I want to live, buy where I can afford. So maybe you should be buying in northern New South Wales, up at Lennox Heads or beyond, somewhere in Ballon or somewhere like that, and renting right here in Sydney.
With a long-term long-term view that one day you'll use the equity of that property to put a deposit where you want to live.
Correct, or maybe you use equity in that property in a year or two's time to buy another property. And over time you build a portfolio, and then you sell the whole lot and you go and buy where you want to live.
So an obsession with owning the place you're actually dwelling in is holding you back?
It's holding you back, and it's also nonsense. It doesn't make sense today, so therefore you've got to start looking at a different strategy, and the strategies are rent where I want to live and buy where I can afford. Pretty simple.
Do you see I know, everyone knows you've got a vested interest. You sell mortgages to people, but do you see this as a time of opportunity? Because I remember investing in a time where interest rates were at 18%, and everyone was whinging then.
Well, everyone's always whinging. There's always an issue. Like, if interest rates are really low, house prices are really high. If interest rates are really high, house prices are low. It's when time when you think, I can get in, but I can't afford the interest. So there's always a problem. The game here is to look for the solution. And the solution is about re-strategizing. Stop trying to do the same thing you've always tried to do. Oh, I can't buy in Sydney because I can't afford it. OK, go and rent in Sydney, buy somewhere else. It's really simple. That strategy is really simple. You must do one thing. Take advantage of the low interest rates and buy where there's upside.
You stay in touch with your customers. I know you have a youth policy through your... You like to stay, tapped into what young people are thinking. Are they doing it tougher than any other generation? Because that's the view that you could get from the media.
I think that right now there is a mismatch between what people are earning and what the cost of living is in a place like Sydney. And it's driven by the thing I said before. This is where all the jobs are.
Yep.
So the cost of being where the jobs are is that there's going to be a mismatch between what you earn and how you can afford to live. So you've got to make some adjustments. Yep. And as I said, that's about building strategies and building long-term, medium strategies and long-term strategies. And young people don't do that today, not enough. The
first house I bought was an investment failure, but it did force me to save. By the time I'd put equity into that house, the next time I moved on I was luckier, but at least it was a forced method of saving. If you just sit at home or at work and say, look, I can't afford anything, that's not going to take you anywhere. You do have to make a move and get into this tide that is the property market. Is that your belief?
I think that's right, Cameron, and also, if you've got spare money, which could otherwise be working for you in a property somewhere, there's no point leaving in the bank today because you're going to be earning like 2% interest. And if interest rates go down a bit lower, you're going to be earning 1.5%. And by the time you pay tax on your 1.5%, and by the time inflation eats into that, you're actually going backwards.
Some people say not going to get into negative gearing because they're about to abolish it. Do you reckon that'll ever happen?
I doubt very much politically that either party will abolish negative gearing and or the capital gains aspect that sits right alongside it. Doubt it very much.
Beautiful. Well spoken. Thanks very much, Mark.
Thanks, Cam.
Enjoy the rest of your weekend. Back to you, Deb.
Yeah, the parties are always talking about it, but I agree they'll never touch it. It's far too political volatile. Great advice. Thanks, Cam. Now, the SBS documentary Struggle